Hello, everyone, and thank you for attending today the Low Income Home Energy Assistance Program, or LIHEAP, Financial Reporting and Payment Management System webinar, hosted by the Office of Community Services, or OCS, and the Office of Grants Management, or OGM. Presenters for today's webinar is myself, Megan Meadows, the Director of the Division of Energy Assistance here in OCS. And I'm also joined today by Andrew Germain, the Director of the Fiscal Operations and Accountability Unit here in OCS, and Natanya Andre from the Office of Grants Management. Drew, you can go to the next slide. During today's webinar, we're also going to cover how to read a notice of award, obligations versus expenditures, breakdown of reporting requirements. We're also going to cover the payment management system. And then lastly, we're going to cover resources and answer any questions. Today's webinar will be available on the Office of Community Services website after the recording is done today. And we'll also post the slides with additional resources that you can access later. If you have questions during today's webinar, please use the Q&A feature in Zoom, and we'll try to answer those questions during the presentation. Throughout the webinar, we will also be doing some polls, so please be ready to interact with us and answer some questions on the polls, and we'll gauge your understanding of the information we're presenting. With that, we're going to go ahead and do our first poll for today. All right, if you can go ahead and put your responses in the poll.
Lots of answers so far. Love to see it. I'm really hoping that this participation continues through the entirety of the webinar. There are 15 polls, so we ask that you stay engaged as much as you can, and hopefully we'll learn a lot today.
All right, I think responses are starting to dwindle down a little bit, so I'm going to go ahead and close off the poll here. All right. And it looks like most folks are feeling mostly prepared or very prepared for the reporting that we're going to cover today, which is great. Hopefully we'll provide you some more information as we go through today. With that, I'm going to turn things over to Drew to get us started.
Hello, everyone. Thank you so much for joining today. Good afternoon for most, but still good morning for some. Really excited to see some really good participation, some good turnout today. And so hopefully you guys learn a little bit something. I know, financial reporting is really probably the most exciting topic you'll have this week. So we greatly appreciate your participation. And if any time, you have questions, as Megan said, we do have that Q&A option available to you. There's also, again, as I mentioned before, several polls, so please participate in those. This meeting will be recorded, so if your fiscal staff couldn't attend and you want to share with them later, that's always going to be an option. So the first thing we're going to talk about, as Megan mentioned, is reviewing your notice of award. We don't plan to spend a lot of time on this subject matter, simply because I think most people know about the notice of award. It's obviously something that gets issued for not just the LIHEAP grant program, but many grant programs across the federal government. So I will go over some of these areas a little bit quickly. Some of the content that we'll cover today is going to be a little bit more generic to just all grant programs, but I will call out kind of the LIHEAP specific areas as needed. So with that, we'll go ahead and get started. You can see kind of the screenshot of the notice of award on the screen. This is obviously something that I think, again, is familiar to most people. Apologies for the blurriness. It was kind of hard to blow up kind of that one-page NOA for you all. But ultimately, the notice of award is found in Grant Solutions. It is found in one of the modules in Grant Solutions. I think most people have access to that. If you don't, we're going to provide some information later in the presentation, exactly who to reach out to if you're having trouble with Grant Solutions. I know that is something that comes up quite a bit, but we're going to just take a little bit of a deeper dive into some of the data on the NOA. There is going to be areas that we don't cover, but ultimately, when we send out the slides, we'll have some additional information on the NOA and additional resources that you can use if you have further questions. So let's jump in. The federal award information on the NOA is obviously very critical. One thing you'll notice on the summary of federal award information for LIHEAP specifically is we tend to defer to C remarks quite a bit, right? And there's a reason for that. Number one is LIHEAP is a block grant, so there's just not as much specific information on some of these line items as other grant awards. You might notice if you have discretionary awards or if you have awards that are outside of HHS, you might see some variation in some of this data. So just wanted to call out that the remarks are really, really critical and really, really important for everyone to read through. And I'll cover that here in just a minute. The first thing I wanted to call out is the budget period. For LIHEAP, you're always going to see the budget period as the 2-year project period. But budget period can mean a lot of things depending on your state, your tribe, your territory, and it can also depend on the granting agency. So ultimately, the budget period could be a single fiscal year, could be a calendar year. It could be just an annual budget that you yourself create. And you think about when you think of the term budget period. For LIHEAP, we're always just going to defer to the 2-year project period. So it's important to keep in mind what budget period means to you versus what it might mean somewhere else. It's critical to know that budget period start and end date is not always the same as project period start and end date. Project period start and end date, or as you'll often hear other federal employees call it, the performance period, period of performance, all kind of interchangeable. Again, with LIHEAP, it's going to match the budget period, but for other awards, it may be different. You may have the full project period start and end date, and the budget period might be specific years or specific time periods within that larger project period start and end date. In general, all of the grant activities that we have should occur within the project period start and end date. There are a few exceptions to that, and I'll cover that here in a little bit. So with that, we have poll number 2. Megan's going to launch it right now. I mentioned it kind of earlier on in the comments. How do you access your notice of award? Is it the payment management system? Is it from your program specialist? Maybe they just email it to you on the reg. For those who aren't familiar with Basecamp, that's kind of I'm glad to see no one is selecting Basecamp so far. That's a file sharing software that we've used in the past. And looks like we have a lot of participation. So I think, Megan, we can go ahead and share results.
I think they were listening, Drew.
They were listening. I love to hear it. I hope that continues. Let me know when we share results, Megan. It's kind of hard to tell here.
Yep, looks like it's sharing right now, and 79% of folks said Grant Solutions.
Which is the correct answer. Grant Solutions is how you access your notice of award. If you don't have access to Grant Solutions, we will provide resources later on. A couple of different answers via email from my program specialist. In the past, you may have had your notice of award emailed to you from your program specialist. There's always that option, but we may just refer you right to Grant Solutions. That's where the NOAs are stored, and that's how those should be accessed. So great job to all those who said Grant Solutions. Digging a little bit deeper into this kind of financial information on the NOA. I'm going to go over this a little bit quick because only so much of this applies to LIHEAP. It's really important to read through this word for word when you get your NOA, despite the award, whether it's LIHEAP, CSBG, a discretionary award, either which way. So lines 20 through 25 are really going to show you kind of the bread and butter of your award. How much money are you getting? How much money are you getting to help families and children in low-income communities in your communities? So these are kind of the most important part of the NOA. Line 20A and line 20B divvy out the award generally by direct or indirect costs. You'll notice that we say see remarks for LIHEAP, and the reason for that is because this is a block grant. We don't tell you necessarily what administrative or indirect costs you can use for your award. However, it's important to know kind of the differences in those. Direct costs typically mean direct salaries, kind of direct program costs that you can apply to the award. Indirect might be something that isn't as easily tied to a specific award program. Could be rent, utilities that's paid for, under multiple grant programs. It's up to you how you define indirect costs and how you calculate those at your state, at your tribe, at your territory. But ultimately, there is an option for this on the NOA, and you might see these broken out more on discretionary awards more than anything. So just something to keep in mind when you receive an NOA. Line 21 talks about authorized carryover. This actually does apply to LIHEAP, actually pretty significantly. As many of you know, you're allowed to carry over 10% of your overall LIHEAP award from the first year of the award to the second year of the award. Now, this isn't spelled out exactly on this screenshot, but it is going to be discussed in the remarks, and I'll get to that a little bit more in a couple of slides here. Offset really isn't used for LIHEAP. It's primarily used for discretionary awards, but this could be something to the effect of, oh, I have a disallowance. I have an outstanding debt to the government. Hopefully you don't run into those issues, but you may see an offset for certain programs, which would just offset that debt or that disallowance to kind of current funding or funding that you're getting under this current NOA. Line 23, this is going to be, total amount of federal funds for this budget period. Remember, line 23 indicates what's obligated for the period under line 19. For LIHEAP, budget period and project period are the same generally, not always the case, depending on the funding stream, depending on the authorizing legislation. Those might be different. So make sure you're associating line 23, which is your total award for that specific budget period. Line 24 talks about cost sharing. This isn't a LIHEAP specific thing either, but you might have discretionary programs that have a match. You might have to come up with your own funding. And then finally, line 25, total for the budget period, whereas line 27 below is for the project period. Line 25 is just basically totaling your match and your federal together. Line 27 really is the most critical. Again, we refer directly to the remarks here, but this is going to be kind of the total for the project period for that 2-year LIHEAP period. So just a little bit more information on the NOA. If you have other awards where this slide might be more useful, feel free to share around for some of our discretionary programs. Ready for another poll. Hopefully I didn't go too fast, but this is a critical thing that often comes up when we're talking about, semantics. Project period means the same thing as budget period. Are they the exact same definition? Dang, this group is smart. I'm gonna have to get the polling. I'm hoping there's some trick questions coming up. Keep everyone on their toes. I think we got about 100 responses so far, so we're good to share the results, Megan. Majority of the folks got it right, 84%. They are not the same thing. Now, for LIHEAP, it's very possible that they are the same in terms of they're both 2 years. Budget period is 2 years, the project period is 2 years. Generally, these are defined differently. Budget period is going to be, a specific point in time in the larger project period. So you might have multiple budget periods within one project period or within the kind of overall award. So most people got that right. Great job, everyone. Make sure to keep that in mind when you're talking with your staff so they know the difference. Never ignore a footnote. We talked a lot about remarks already, okay? The footnote has the most important information as it pertains to LIHEAP. This particular footnote talks about where the funding comes from, which is the Infrastructure Investment and Jobs Act, IIJA. Lists the public law, talks about the larger LIHEAP Act or the larger LIHEAP statute that might apply to the program. It talks about some of the terms and conditions, Part 96, if you've ever had an opportunity to be monitored by the OCS team, we referred to some of this criteria quite a bit. So if you're reading through this and it looks totally foreign, I definitely recommend doing a little bit of Google researching after this webinar, of course, to make sure that you're familiar with some of these criteria. Ultimately, it does talk here about the 90% being awarded or obligated within the first year. And this is really critical, right? I'm going to cover this in a little bit more. 90% of your award has to be obligated by the end of the first fiscal year of the LIHEAP period. That means different things for different grant recipients. And that 10% can be carried over and ultimately obligated in the second year. So we'll cover that a little bit more. I'm going to go through these next 3 slides really quickly. Ultimately, terms and conditions talks about where to find the terms and conditions. There are program-specific terms and conditions for LIHEAP. Make sure you know exactly what those are. And on top of that, there's some other really critical information in the terms and conditions, reporting requirements. We're going to talk about the SF 425 at length today. Talks about when that's due. It also has that information for grant solutions. If you're a grant recipient on this webinar right now and you've never accessed grant solutions, you have no idea how to access it, look at the screen. There's a help desk. There's a phone number for technical assistance. Make sure to get in touch with them. Make sure that you get that access. We really want to make sure every one of our grant recipients has the proper access to make sure they're getting that critical information. And so ultimately, make sure you read through your general terms and conditions. That kind of finishes up my elevator pitch, which is, you know, maybe a little longer. That'd be a really long elevator ride, but it was a quick run through of the notice of award and how it pertains to LIHEAP. Obviously, we don't have an unmute option in this webinar, but if you have questions about the NOA, throw them in the Q&A option. Megan and Tim and Tanya are standing by to answer those questions. No dumb questions. I even had to do a little bit of research on the NOA before this presentation. So there you go. We're going to dive a little bit deeper into some of the really important and critical things as it pertains to LIHEAP, and that is the difference between obligations and expenditures. So as many of you know, the LIHEAP statute really talks mostly about obligations, okay? The federal government doesn't really give you a definition of what an obligation is, right? We don't, at the federal office, we don't tell you this is what an obligation means for you. Generally, it means a legal commitment of funding. Differs by grant recipient. It could be an application for services. It could be a contract with a sub-grant recipient. It might mean something different to you at your state, tribe, or territory. So make sure you understand what your definition of obligation is. It's also important to know that how you obligate your LIHEAP funds has to match how you obligate other funds within your state, tribe, or territory. So if you obligate Head Start funds one way, make sure you're following that for LIHEAP as well. In accordance with your own rules, your own policies and procedures are very critical when it comes to how we define obligations. I already talked about how 90% of the award must be obligated in the first year and 10% should be carried over in the second year. And I think that that's pretty well known under the LIHEAP program. But if you have questions about that, your program specialist is standing by to help. The last bullet on the screen, funds not obligated in accordance with the requirements listed above will be reallocated annually, also known as reallotment, which we will cover at length here later in the presentation. But just know that if you can't obligate all your funds in that first year, that 90%, you may be subject to reallotment, and we'll cover that here in a little bit. Expenditures, also known as a liquidation of obligations. You've made an obligation. Let's just use the example of a contract. You've obligated the funds legally as it pertains to your state or tribe or territory rules. Now you got to spend the money. You got to pay those invoices. You got to transfer the money, wire the money, however you're paying funds. You must expend LIHEAP funds in accordance with your own rules. Again, similar to obligation, make sure you're not treating LIHEAP differently than you're treating your own state, tribe, or territory funds or other federal sources. That would include the amount of time you have for liquidation. So if you make an obligation in January and your state rules say you only have 90 days to liquidate that obligation, meaning you have 90 days to fulfill your obligation, that has to be the same rule for all LIHEAP funds. Now, that's a pretty quick liquidation time period, but it is one example that we've seen before. So make sure you clearly understand kind of how much time you have to liquidate. The third bullet on this slide, PMS accounts close 5 years after kind of the end of the first year of the award. So if for some reason your state, tribe, or territory, which I'm highly doubting, but let's just say they say you have unlimited time to spend money. Once you get the award, you can hold on to it, place it in your bank account for 10 years. Well, your PMS account closes after 5 years, meaning that the funding is no longer going to be available to you. So that's kind of the federal stopgap on the liquidation of obligations, is that 5 years. What we're going to be looking for at OCS in our model plans, as many of you know, once you've completed your model plan, we ask about this now. We look at this during our monitoring efforts so much. We're going to look to make sure that whatever your state rule is, whatever your tribe rule is, whatever your territory rule is, that is being followed for LIHEAP. So make sure you understand how much time you have after you make an obligation to spend your money. If your obligations aren't liquidated in the 2-year project period, remember, LIHEAP is a 2-year period. If it's not liquidated in that amount of time, you have to have an active agreement with a partnering agency or a partnering vendor that allow for an extended liquidation period. So let me give a quick example. Let's say that the LIHEAP, the 2-year LIHEAP period is ended, and ultimately you receive an invoice from an IT contractor, and the IT contractor's period of performance in that contract ended the same time that your period of performance with LIHEAP ended, September 30. You don't have an active agreement with them. You'd ultimately be making an unallowable payment at that point because you're paying outside of the contract period, you're paying outside of the 2-year LIHEAP period. Now, let's say you have a weatherization contract that goes for 3-4 years. You know, weatherization takes a lot of time and effort. We know that. If there's an active agreement and your state rules, your state policy allows for liquidation outside of that grant period, that 2-year grant period, then it's fair game. So there's 2 steps there. Make sure that you're in compliance with your own policies and procedures when it comes to liquidating funds, and make sure you have an active agreement. So if someone from OCS or another audit shop comes to you and says, "Hey, we saw you paid some bills in December, but the program ended in September." Oh, don't worry, we had a contract. We extended our contract with them because they had a little bit of a delay in spending down funds. That's all okay. LIHEAP supplemental terms and conditions, again, please read through these, but they do require that you notify your grants management officer at OGM if they require more than 1 year from the project period end date to liquidate obligations. You know, a year is a long time after the project period ends to still be spending funds. But ultimately, if you go beyond a year, you have to let OGM know that is a requirement that we are starting to enforce. I saw Brian's question. I'm going to let Megan answer it just so I can move on, but I think the short answer is yes. Expenditures, obligations, really complicated. Reach out to us if you have questions. We do have another poll here, and I think everyone should get this one pretty easily, but the Office of Community Services provides a universal definition of obligation and expenditure to grant recipients. Okay, seeing a little bit more split on this one. Good. I've tricked you. That was the goal. I'll let Megan decide when to share. This was about 60-40. The short answer is no. We do not tell you what obligation and expenditure means for your state, tribe, or territory. Ultimately, your state, tribe, and territory comes up with their own definition within these kind of larger federal boundaries, right? You know, we really are only going to take issue if it's clearly erroneous. Now, I know that's a really loose term, but ultimately, make sure that your state, tribe, or territory policies and procedures define what those are. Now, that definition could simply be illegal commitment of funds. Just make sure that you have your own definition, and and that might vary grant recipient by grant recipient. So the correct answer here is false. We don't give a universal definition for LIHEAP. All right, moving on. Vendor refunds, everyone's favorite topic. If you've been monitored by OCS lately, we tend to talk about this a lot. I'm not going to spend a lot of time on it today because obviously we need to get to the meat of our presentation, which is financial reporting. But as an example, a utility vendor, they identify unused LIHEAP funds that were applied to an inactive utility account. Maybe the customer moved, they're deceased. They've had these funds sitting on this utility account for maybe a couple of years. They say, you know what, we're sending it back to you. Now, I know every state tends to have different ways of handling vendor refunds. I'm aware of the fact that there are some unclaimed property laws within certain states. And so we're going to take those on a case-by-case basis. When we talk about vendor refunds, we're referring to money that makes its way back to either your partnering agencies, your subgrant recipients, or to you as the prime grant recipient. It does happen. Could be a vendor refund, could be an erroneous payment, a payment that you made in error. It could be a number of different things, but we're generally calling these refunds by vendors. So what's the required action? If the vendor gets the money, the vendor has the money that they can't spend. There's no customer to apply the LIHEAP benefit to. Well, that unused benefit either has to, there's 2 things. It can either be returned directly to the grant recipient, to the state, tribe, or territory, or it could be returned to a local agency, a local administering agency, depending on how you set up your LIHEAP program. You may not have local agencies, but many states do, and some tribes do as well. So ultimately, there's kind of two things that need to happen there. The vendor has to return the funds one way or another. Now, what is your responsibility as the grant recipient? Grant recipients must ensure that benefits returned, and this could be it could be an erroneous payment. It doesn't necessarily have to be an unused utility payment, but they need to make sure that they're not reissued outside of the project period. Now, why is that? Because if once we're outside of that 2-year project period, right? If we're reissuing funds or sending money back through our local agencies out into the network, that could be seen as a new obligation. Remember the 90-10 rule, 90% in the first year, 10% in the second year. So if you carry over 10%, that max 10% of your award, and you receive a vendor refund in that second year, well, that vendor refund is going to push you over 10% because you're going to have to reobligate that vendor refund. You're going to have to send it back out into the community, right? So we always recommend you carry over less than 10% to account for maybe some of that correction that happens, whether it's a vendor refund, accounting corrections, erroneous payments, because once the money comes back, if you push it back out, it ultimately is a re-obligation. And we know we can't obligate more than 10% in the second year of the award. If the funding comes back outside of the 2-year period, odds are it probably has to be returned to HHS. It's ineligible for re-obligation. There is some instructions on how to do that, which we'll cover in a later slide. Just understand that you need to have policies and procedures for how to track this stuff. We fully understand this is not a large amount of money, but it is something that is important because this can affect your obligation balances on your SF425 and your carryover and reallotment report. If money is coming back and we're re-obligating, that's going to affect how you've reported obligations. So it's really critical to know, when do I need to update those reports? Maybe I check it quarterly. Maybe I update the reports as I receive vendor refunds. Maybe it's on an annual basis. And I'll kind of cover why that's critical as we go through the rest of the presentation. Poll number 5. Hopefully I'm not losing anybody yet. Okay, this one's a little bit complicated. So we're gonna learn together. It's been 1 year since my 2022 LIHEAP award ended. So in this example, it's been a full year since the end of the 2-year project period, but I just received invoices from my IT contractor. My IT contractor did some work at the end of the project period. If I want to spend that money, what do I have to do? What are the things I have to do to make sure that this money is spent in an allowable manner? I'm going to give everyone a little bit of hint. There's 3 out of the 6 selections that apply here. So select 3 out of 6. I'm seeing 3 that are taking a leave, which I'm really excited about, which means people are listening, which the fact that you have to listen to my voice for this long is I'm sorry. You definitely deserve an early release today after this, but I'm really excited to see a lot of correct answers here. 3 out of the 6 apply. And we're about at 100. So Megan, if you want to share results. Very, 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 very good, folks on the call. Number 1, email your grants management officer to request an extension. Yes, you have to email your GMO to make sure that they approve you continuing to spend funds after that year post-award period. The second correct answer is ensure my organization's internal policies and procedures allow for liquidation. Yes, you got to make sure that that's okay based on your state, tribe, or territory rules. What if they say no, you got to liquidate by 90 days? Then that could be a potential issue. The third thing is have an active agreement with the IT contractor. I mentioned this. Make sure that you have an agreement that allows for you to spend this. If an IT contractor is sending you invoices, months or years after their contract ends, probably not an allowable expense. I figured the first one would trip people up. Email my program specialist to request an extension. We love our program specialists. They're the best. But ultimately, they're not the final say in this. You're always welcome to email your program specialists. So that one was kind of a trick question, but ultimately it is the GMO. Seek approval from the grant IT administrator. That just doesn't apply here. And update my model plan. We love a good update to the model plan, but that doesn't apply here either. So most of you got it right. Great job. Appreciate everyone's critical thinking on that one. All right, obligations and expenditures on financial reports. We're getting into the meat of the presentation here. So hopefully everyone is just as engaged now as they were 30 minutes ago. But both the standard form 425 federal financial report and the carryover and reallotment report require unobligated balances. So in order to identify unobligated balances, we have to know what we're obligating. We have to know what we've obligated in that period of time. So those numbers matter for both reports. Expenditures are only requested on the 425, the federal financial report. So you actually don't need to know your expenditure information for your carryover report. It's really just the FFR that requires that information. Your accounting system should be able to track both of these separately, especially the expenditure side of the house. Obligations might be a little bit more complicated, but just make sure you have an adequate tracking mechanism for obligations, because that is a really critical piece when it comes to our reallotment. One thing that tends to trip people up on the FFR is unliquidated obligations. An unliquidated obligation just refers to an obligation where the expenditure hasn't occurred yet. You know, you have that contract with the IT administrator. You have that contract with your local administering agency. Maybe it's a nonprofit, but they haven't invoiced for anything yet, right? So unliquidated obligations is we've made the obligations legally with our policies and procedures. We just haven't had expenditures to back that up yet. Poll number 6, we're moving right along. We're almost halfway through almost halfway through the polls. So the question is, I need to track my grant expenditures so I can properly complete which report? I just touched on this, but which report do we need the expenditures for? So there was a participant in the chat that asked about returning funds to HHS if they have a contract that extends 2 years. Remember, the obligation period is never extended. So your LIHEAP period of performance is 2 years, 90% obligated in the first year, 10% in the second year. That can never change. Even if you have an active agreement that extends beyond 2 years, the obligation period never changes. So if you receive a refund or an erroneous payment or something comes back outside of the 2-year performance, we can't re-obligate it because the 2-year period of performance is over. All right, let's share results if we haven't already. The question was, I need to track expenditures on which report? It is the SF425. The carryover and reallotment report tends to focus more on obligations. And of course, we're going to get into that in a little bit. Here we go. LIHEAP financial reporting, the SF425. This is standard for all grant programs in the federal government. Doesn't matter if you're DOJ, HHS, any of the granting agencies. It's a standard report for almost every single award. We talked about the reporting details, the deadlines being on the NOA. So make sure you read your NOA for those details. It tracks the award expenditures. You can report unused funds or unspent funds. The SF425, as of 2021, I believe, is now submitted through the payment management system. So this is separate from Grant Solutions, okay? We're going to give you some resources on how to access that system, but you submit your SF425 in PMS. Conversely, the carryover and reallotment report, it's submitted really twice each year. There's an initial report that comes around the August 1st timeframe, which is just an estimate. And there's a final report, or your annual final report comes at the end of the year. We're going to talk about this more, but also ultimately there's kind of 2 variations of this report that you need to keep an eye out for. This identifies what you can't obligate. We need to know what you can't obligate so we can take that funding, put it back into the LIHEAP formula, reallocate it out to the network. That's how the statute works. This report is submitted through Grant Solutions in a module called the Online Data Collection Center, OLDC, different from the SF425. Poll 7. I'm pretty sure this is going to be an easy one for folks. The SF425 is submitted to OCS in what system? PMS, Basecamp, via email, Grant Solutions. Okay. Most folks are listening, which is great. I think we can go ahead and end the poll. It is now submitted in PMS. Pre-2021, it was submitted in OLDC. Post 2021, all SF425s are in PMS. I think we have actually a second poll number 8. You probably know where I'm headed here. The carryover and reallotment report is submitted to OCS in what system? All right, we can end the poll, 90-10. Whoever said Basecamp, I love you. You're near and dear to my heart. It is submitted in Grant Solutions OLDC. So FFR is PMS. Carryover and reallotment report is OLDC. And those results should be shared. Most people got those 2 polls right. So just a quick check-in to make sure you're listening. All right, let's get into the nitty-gritty of the SF425, the Federal Financial Report, everyone's favorite document. If you're on this call and you have no idea what this is, please pay attention and reach out to me if you have questions. So there are 2 SF425s. There are 2 federal financial reports that you must submit in your 2-year LIHEAP period. There is the initial or an interim report, annual report as we often call it, and the final report. So the annual report or the interim report is submitted, which covers the period of the first year. Okay, so it's a 2-year LIHEAP period, the first year. It's actually due 90 days after the end of the first fiscal year. So you get an award on October 1st, you go through the whole fiscal year, federal fiscal year to September 30. You have about 90 days after that to submit your FFR for that period. It's a 1-year period on these reports, on the annual report. This final report, you actually have a whole year after the grant period ends. So it's a 2-year project period, performance period. Once that ends, you have a whole year to submit your final FFR. This is different for every program. CSBG, it's 90 days for both reports. You have 90 days for the first one, 90 days for the second one. LIHEAP gives you a whole year to get that done. I highly, highly recommend getting it done earlier, because if I'm trying to fill out a financial report 364 days after the period ended, 1 day before it's due, I'm not going to remember what happened a year ago, right? So as soon as you've liquidated your obligations, your accounting books are ready to roll, I recommend filling these out. And how these are filled out, who fills them out, when it's done, should be spelled out in your policy. We're going to break down the FFR all the way through. The heading, obviously a lot of important information, specifically box 5. It's blacked out on the screen because we don't want to give away any one grant recipient's information. Box 5 is your unique payee account number tied to your PMS account. I believe it's a 4 or 5 digit account number. That's how you get paid. That's how PMS gives you money. So make sure that that's correct and consistent across your reports. Box 6. Some grant programs, not LIHEAP or CSBG or ones in OCS, some discretionary programs actually require SF425 FFRs quarterly or semi-annual. The only 2 you have to worry about for LIHEAP is the annual report or the final. There's one after the first year and one after the second year. Box 7 is the basis of accounting. The basis of accounting for majority of our grant recipients is cash. You might have some that have an accrual basis. It just has to do with how you're logging expenditures and when they get logged and when you report them. And so ultimately make sure that you're aware of this. If you're in your fiscal department and you don't know which one you guys account on, make sure you know that. Program staff might not know. Ultimately, it's generally cash for LIHEAP. Box 9, this is when it tells you the reporting period end date. So you'll see under box 8, what do we have listed there? That's our 2-year performance period. It's our project period. It's a 2-year LIHEAP period. Box 9 is telling you, okay, I need to report information up until which date? September 30, 22. That's exactly halfway through my project period. This means it's an annual report. We're reporting on 1 year's worth of data in that box. If this were the final report, it would say September 30, 2023. You'd be reporting on the whole period. This is just your interim, your annual, your midterm report, for lack of a better term, which is showing all the information through that first year. Doing okay on time. Federal cash. This is an interesting box. This is talking about the expenditure. This is getting into some of the more expenditure data that we talked about, but it's not only expenditures, it's cash. It's cash in, cash out. So if we look at box 10A, okay, 10 says transactions, okay? 10A is referring to actual cash received from the awarding agency as of the reporting end date. Remember, the reporting end date is box 9, September 30, 2022 in this case, okay? 10A is cash received. Now, cash received could be interpreted as my grant, right? Not true. Remember, we're talking about cash receipt. So what money have you received from PMS? What money has come to you from PMS as a part of your award? So box 10A is not necessarily your full award. It's the cash that you've received under that grant. 10B, disbursements of money as of the reporting period end date. Could be expenditures, but not necessarily. Cash disbursements is the funding that's actually gone out. It's the money you've actually spent. You may have expenditures listed in your accounting records. You may have a lot of expenditures that haven't been paid yet, depending on how you run your accounting system. Cash disbursements is of 10A. Those keep in mind, it's all cash. So 10B is how much of the cash has gone out. You've got the money from PMS. How much of that has actually gone out? How much of it has been dispersed? Line C is the difference between the two. In this particular case, on this FFR, they said they had a massive accounting correction. So they had pulled $332,000 from PMS. Majority of it went out as it needs to do, right? You are required as a grant recipient to only draw down funds for your immediate and reasonable needs, right? So ultimately, when they pulled that $332,000, it's because they had expenses. They needed the money to spend on that. Now they had a correction, an accounting correction, so they have $32,000 sitting in their bank account. Generally not a good thing. Make sure that you are not holding on to money for long periods of time. That's an audit finding waiting to happen. A lot of grant recipients have policies and procedures about how long they can have cash on hand. I've heard 10 days for some of our discretionary awards. So just make sure that you're not holding on to money for too long. Still in section 10, but going beyond cash now. We talked about the cash, right? Cash received from PMS, cash dispersed from that PMS cash, and then what's left over. Now we're talking about expenditures and unobligated balances, okay? This could be a little bit different than how you track cash. So let's just start with 10D, total federal funds authorized, okay? Well, federal funds authorized under the program, that's probably going to match your NOA, right? We talked about your NOA. Now, there could be multiple NOAs for one program. We know that happens with LIHEAP all the time, right? We have a CR, there's supplements, things like that. Total federal funds authorized is going to be the total amount of funding for that grant number for that funding stream, okay? Total award received as of the reporting date. 10E is your federal share of expenditures. This varies depending on if you do cash flow or accrual accounting. Generally, expenditures for the period. Again, most of you do cash accounting. Ultimately, if in this particular example, 10E, their expenditures are actually a little bit higher than, if you remember, their cash disbursements. So that just means that they have expenditures listed here that they haven't drawn down funding for. There's no cash associated with those expenditures, but they've incurred expenses, okay? So 10E really is going to be, let's look at our accounting records. What expenses have we incurred? Okay, we're not talking about obligations at this point. This is expenditures. 10F, we talked about this already. It's unliquidated obligations. So it's obligations that you've incurred. Maybe it's via a contract. Maybe it's via, some sort of commitment for funds. It could be an application for services. You've incurred the obligation, but it's unpaid. It's unpaid or it's unrecorded yet in your accounting system. So in this particular example, the grant recipient is reporting that there is $12,396,306 in obligations that they've made where they don't have expenditures. They haven't liquidated those obligations yet, okay? 10G, total federal share. This is going to be simply box 10E plus 10F. I believe the system will do this for you. But ultimately, your total expenditures plus your unliquidated obligations really totals your obligations for the period. So it's the 12.3 million plus the 381. Unobligated balance. Okay, box 10D minus 10G, you have your total funds that you're authorized, and G is telling you the obligations for that period. It's what you've expended plus what you haven't expended yet, but you've obligated. So it's E and F, that 12.7 million on the screen. Subtract that from your total funds authorized. Line H is really, 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 really critical on your FFR. I can't stress this enough. OCS is constantly looking at what you have reported as unobligated balance of funds on this report. Why? 90% required obligations in the first year on the annual report, and then you can carry over 10%. So quick math, does the 928 equate to less than 10% of the award? It does in this example. But if line H is showing a whole big chunk of unobligated balance, what does that mean? It means that you're eligible for reallotment. Some of that money could be coming back to HHS, which of course we don't want. So make sure line H is as accurate as humanly possible when you fill out these reports. I'm going to go kind of quickly through this. This is the indirect expense. You're required to list how you calculated your indirect expenses, what period of performance it was. Some people have maybe one indirect cost rate for a certain period of time, and then they get a new indirect cost for a second period of time. I'm going to go back to answer the question in the chat. The question is, what's the difference between funds authorized and cash receipts? Cash receipts is what funding you've pulled from PMS. The cash you've received from PMS. Funding authorized is the full award, regardless of how much you've pulled from PMS. It's your total grant award for that FFR. Good question. And that's a good point. 11C, I talked about it being an effective end dates for the rate. 11D is the base against which your rate is applied. This should be spelled out in your policies and procedures on how you're calculating indirect costs. Are you calculating the indirect costs based on a direct cost, a modified direct costs? And then ultimately, we're doing some math. Box 11B times 11D, you're taking the rate times the base. You're figuring out amount of the federal share in box E. Again, this is kind of coming back to if you have matching, this would when it would come to play. And then ultimately, 11G is the total. So you should be able to calculate what your total direct costs are, indirect costs are, total from column D, column E, column F. This is a little bit more complicated. Indirect costs can be determined in a lot of different ways. You can have a negotiated indirect cost rate with a cognizant agency, which is generally meaning the agency that is your most amount of federal funds. You see that more often with states. For tribes and territories, maybe have less federal funding, you might have a de minimis rate, which was previously 10%. It's now 15%. And that's kind of what the federal government has decided is like the minimum. And so ultimately that would have to be something that's spelled out in your policies and procedures. Or you can have a cost allocation plan, which is, I think, another really common way of doing it. Cost allocation plan is like, these are the expenses we have for LIHEAP. Or for all of our grant programs, we're going to divide it up by, 10% for CSBG, 10% for LIHEAP, 10% for SSBG. Of course, it has to be supported by actual numbers, but that's kind of the difference there. So most states are either going to use the de minimis, most grant recipients are either going to use the de minimis rate, 15%, or they're going to have a negotiated cost rate where they have a federal agency that decides what their rate is. Poll 9. It's been a while since we had a good poll. Let's see what we got, Megan. The unliquidated obligations on my SF425 box F are generally defined as what? So it's an unliquidated obligation. It's an obligation you've made, but it hasn't yet been liquidated. What is the best definition that suits that line item? All right, either y'all didn't need this training in the first place, or I'm doing a hell of a job because you guys are killing it on these polls. Blowing it out of the water. We've got maybe 5 more responses before we share just above 100. All right, Megan, I think we can share the results. This makes me extremely happy that everyone knows this answer. It's obligations incurred but not paid. It's unliquidated. It's an obligation you've made via contract, via application, etc. Hasn't been paid yet. We haven't cut the check. And so that is a line item that you need to know on the FFR. And of course, these slides will be shared after the fact if you want to go through what we already covered. So Great job, everyone. Carryover and reallotment report. So this is where we talked about the FFR, and we talked about that line H on the FFR being critical, right? What your unobligated balance is. Okay. Now, carryover and reallotment report, equally important because OCS and OGM together compare these reports. We compare, okay, they reported this much as unobligated on the FFR. What did they report on the carryover report? Okay. So really important that these match, and I'll cover that in a second. When it comes to due dates for the report, remember I mentioned there are kind of two carryover reports due each year. The first one is due around August 1st. It's the initial or estimated report. The reason that we do this is, number one, it's required in the statute. But number two is because we want to have a sense of where grant recipients are at on their obligations. If most of our grant recipients are saying, I haven't obligated anything yet, and it's kind of getting to the end of that first year, that might be an issue, right? We might want to provide some training and technical assistance to our grant recipients to make sure we get that money obligated. And then the final report is due December 30th. A lot of people don't know this. Once you complete your initial or estimated report August 1st, you just go back in and you update it near December 30th with actual numbers. Maybe something changed in those 3 months or 4 months. Maybe something changed. Maybe I was able to obligate more money than I thought. Maybe my estimate was wrong. Make sure that you go in and update your carryover reallotment report so the final numbers are correct by December 30th. Heading of the carryover and reallotment report, a lot of public law mumbo jumbo. The main thing to know is carryover report includes all LIHEAP funding. The SF425 is by award. So if you get a regular LIHEAP award, an infrastructure award, an American Rescue Plan Act award, whatever else Congress comes up with, we're completing a separate FFR for all of those funding streams. The carryover report, it's all in one, and we'll get to that here in a little bit. It mentions in the kind of first box there, section 1, federal fiscal year 1, FY1 funds reallotted for federal fiscal year, whatever it is, indicates reallotment fund from previous year. So when you receive a reallotment award, right, from OCS, the funding is from a prior period, but you're receiving those funds in that year. So the first fiscal year funds, that when we say what are your reallotment funds, we're referring to the reallotment award you get that year. And I'll cover that here in a second. Reminder that 90% of total funds must be obligated by the end of the first year. We know this by now. You all are experts. Goal 10. Oh, see, I just covered this. Everyone should get 100% on this one. My initial and final carryover reallotment report is due on what dates, respectively? What dates are they due? This can vary, so there's really no wrong answer here. We can go ahead and share results, Megan. Man, I'm trying to trick y'all, but y'all are too good. August 1st and December 30 is correct. October 1, December 30, that's a close second. If you're submitting your estimated carryover and reallotment report on October 1st, it's probably a little bit late. We generally try and do those in August. May not be August 1st, maybe August 10th, but August and December is the correct answer. Great job, everyone. Appreciate your participation. All right, let's get into it. Box 1.1. I know we're getting tired. We're nearing the end of the webinar, but this is where we're getting into additional critical information here. Box 1.1 is your total LIHEAP grants awarded by OCS that year. So a current year amount payable. So add up all your NOAs for LIHEAP. Ultimately, it's the amount payable. So it's regular block grant funds, reallotment funds that you've received that year, infrastructure funds. You know, if there were other funding streams, they would also be listed here. So we're really asking you to add up all of your authorized funds. Remember that authorized line item on the FFR? Add that up for all of your LIHEAP grants. That's what goes in box 1.1. 1.2 is just going to show you what you can carry over. It's 10% of your total award. Remember, the carryover is based on the total award. It's not just individual chunks, you know, IIJA, reallotment. It's 10% of the whole thing. So you may be spent, or you may be obligated 100% of one award, and don't obligate a lot of another award. As long as it totals to 10%, you carry over 10%. So if your total award in this case was 23 million, 2.3 million is your 10% carryover. Now, the next three lines are breaking it out by funding stream, which this can get a little complicated, right? I told you the carryover and reallotment report was filled out 1 for all awards. Well, 1.3, 1.4, and 1.5 are really breaking it out by funding stream, okay? So 1.3, we're talking about your regular block grant funds, right? Now, you might say, well, reallotment is a different award number, or has been. Reallotment might be a different, we get it at a different time, different NOA. True, but it's still regular block grant funds that we consider those reallotment funds. So 1.3 really should be a combination of your regular block grant and your reallotment for that year. Ultimately, just think main LIHEAP and whatever little reallotment you get, that's what goes here. This is unobligated balance. So what can't you obligate from that award? What didn't you get to did you obligate 90% in the first year? Did you obligate 100% in the first year? Whatever you didn't obligate in the first year, that's what we're looking for right here. 1.4 and 1.5 obviously depends on the funding stream. IIJA is the most current, most recent ones that you were not able to legally obligate that fiscal year. In this particular example, looks like the grant recipient obligated 100% of their IIJA funding, so they have $0 listed as projected unobligated, okay? So 1.3, 1.4, 1.5 broken out by funding stream, simply looking for what you couldn't obligate. And then of course 1.6 is your total unobligated balance for the year, okay? So we were unable to obligate 3.874 this year. Now, bottom two lines really critical. Carryover amount, it's the same as 1.2, it's 10%. So what you're allowed to carry over from year 1 to year 2, I believe OLDC automatically fills in that number for you, but the carryover amount box should match 1.2. Reallotment amount is really, really important. This is the amount of money that is in excess of 10% that you are not able to obligate in accordance with your own laws. So this is the amount, this is the difference between what you're allowed to carry over and what you can't carry over. So in this example, the grant recipient has $1.55 million eligible for reallotment, okay? Now, when I've seen people fill out this report and they've got their whole grant listed under reallotment amount because, the formula didn't work, it wasn't filled out correctly. If you're reporting to OCS that your reallotment, whatever is listed under that reallotment, that money is ultimately going to be pulled back from OCS and reallotted to the rest of the network. So make sure these numbers are correct. All right, and this is where we're going to stop and take and kind of try and tie this together just a little bit. Okay, there's really two questions you need to ask yourself when you complete these two reports. Did I report unobligated balances on my annual SF425? Remember, I talked about line H being really critical. Each FFR under line H says what your unobligated balance is. So did you report unobligated balances on either of those reports? The second question is do they match? And that's the even more critical question. When you total all of your unobligated balances under section 10 line H on your FFR, do they total the unobligated balance on your carryover report? So I'm just going to back it up for a second. 1.6 in this screen, total projected unobligated balances is 3.8749888. If we go all the way back to the FFR, remember line H, unobligated balance, okay? This says 928,275. This is just one funding stream, right? So the question that we're going to have, we're going to take all of this grant recipients, their FFRs, we're going to take the 928,275, we're going to add it up with all of the FFRs associated with LIHEAP, and we're going to check to make sure that it matches 1.6, total unobligated balances. So it's really critical that those two match. If they don't match, you're probably going to hear from us. Generally, we defer to the carryover and reallotment report, so make sure that those two match. It's really important that you compare those reports. So the final kind of blip on this slide is if you answered no, do the unobligated balances on my SF425 match my carryover? Then they don't reconcile. This is going to create delays in the provision of reallotted funds, and it may result in OCS or OGM placing the incorrect amount of funds on hold in PMS. We're going to get to that here in a second, but ultimately funds that are eligible for reallotment, we place those on hold in PMS. And you don't want that to be the case if it's incorrect. So make sure that they match. So what are some strategies for ensuring this? I promise I'm almost done. You're going to get to listen to somebody else talk after this. Partnerships between programmatic and fiscal staff. We hear so often when we go on site and we do monitoring engagements that, oh, well, program fills out the carryover report, but the fiscal staff complete the SF425. That's fine, but what if there is a discrepancy? When you have multiple people filling out reports that tie together so well, you're bound to have errors. So we highly recommend you meet with your fiscal team. Program and fiscal teams meet at least on an annual basis, but probably more often when you're completing these reports to make sure that your numbers jive, to make sure you're going off of the same data. Another great strategy, maybe you're responsible for both reports, save a copy of the financial data. What financial data did you use when you completed your SF425? What financial data did you use when you completed the initial and the final carryover report, right? There's two. So making sure that you have a record of what data you're using when you complete these reports, also really critical. Print out your accounting records, print out your general ledgers, highlight the numbers that you're using so you can go back and go, oh yeah, well, I used this data, but I pulled it in July and now I'm filling out a report in December. I got to update that, right? So that's really critical. This one I think is probably the best thing that you can do. Complete your annual report and your final carryover at the same time. They're both due December 30. They're both due at the same time. Remember that annual report is due for the SF425 90 days after the end of the fiscal year, and your final carryover report due 90 days after the end of the fiscal year. Complete them at the same time. You'll be better off knowing that you use the same data. And then number 4, I know many grant recipients do this. Track your obligations on a regular basis. Don't just look at it annually. Take a look at it monthly. Take a look at it quarterly. Are your quarterly numbers, when you add them up, are they matching your annual numbers? Are you seeing trends? Tracking them more on a regular basis just gives you more familiarity with the data. So when it gets to be the end of the year and you're responsible for filling out these reports, you already kind of know what's happening with your grant. You know what's maybe not obligated or obligated because you've been tracking it on a monthly or quarterly basis. Lastly, ensure adequate procedures for tracking vendor refunds. I talked about this, very critical. People make mistakes. People make mistakes in accounting. We get vendor refunds or credits that can change our obligation numbers. Make sure that you have procedures for tracking that so you know, oh, yes, that's why my carryover obligation numbers need to be updated from the initial to the final report because I got a vendor refund. Goal 11, we're getting close, guys. I really appreciate everybody's participation. Box 1.6 on my carryover and reallotment report should be the sum of which line from my 425. Okay, we talked about box 6. Box 6 on the carryover and reallotment reports, your total unobligated balance. It's everything you weren't able to obligate, but that needs to match the sum of which line item from your SF425. So you should be able to look through all your SF425s, total up all the unobligated balances, but what line is it? A little bit slower to answer this one. That's okay. This is complicated. We're getting close to 100 respondents, so we're almost there. Total projected unobligated balance, box 1.6 on my CRR, needs to match the sum of which line item from my 425s. Got 93. Come on, I know a few more folks know the answer. We're getting close. All right, I think we're good here, Megan. Let's share the results on this one. This one was tough. This is something that I think ultimately it's really good information to know, but just by reading it in a question format, not being able to look at the report is challenging. The correct answer is line H. Line H on all of your FFRs, unobligated balance of federal funds, needs to total your final number on box 1.6. Line F came in second, federal share of unliquidated obligations. That's a good miss. We call that a good miss, a good second place answer. Federal share of unliquidated obligations, remember, it's obligations you've made that you haven't had expenditures for. And so ultimately that's a little bit different because we're looking for unobligations, things that haven't been obligated. Unliquidated obligations indicates that you've obligated the money, you just haven't spent it yet. Not a lot of real important information in the final comments of the CRR, but I do encourage you to complete it. 1.6a says, is why are the funds being carried over? Hey, you know, we had a natural disaster and we just couldn't carry over, or we needed to carry over more than 10%. In this scenario, the grant recipient said, we spent funds at a slower pace. This is the estimated report, which is great. You know, we love an estimation. You know, we expect everything to catch up in the next couple of months. No harm, no foul. 1.6b, type of funds and assistance carried over. Again, maybe you spent all your block grant funds. Maybe you obligated all the block grant, but you forgot about your IIJA. You forgot about your reallotment. You haven't touched it yet, right? You can just say, hey, you know what? The unobligated funds are our IIJA and reallotted funds. You know, we're hoping to get those out, you know, in this way. Crisis benefits, weatherization, whatever it may be. Poll 12, and then I'm going to pass it on to one of my colleagues. Unobligated LIHEAP funds in excess of what award percentage are subject to reallotment after the first year? I would bet most of you will get this one right. This has always been a LIHEAP rule. And so I'm happy to see the numbers shoot up. We're already almost at 100 respondents and 98% of them are right. Megan, we can share the correct answer. It is 10%. 90% obligated in the first year, 10% carried over into the second year. Whatever's carried over into the second year above 10%. So if it's 11% that you couldn't obligate, maybe 15%, the difference between 10 and whatever that percentage is subject to reallotment. So I'm glad everyone got that right. Oh, another poll, poll 13. I love a good poll. We did a lot of polls here.
Sorry, Drew, it's not letting me launch that one, so I think we'll have to skip that one.
No problem. Oh, you want to try one more time?
No go for my end.
All right.
Oh, wait. That works.
Here we go. Okay. Might have been on my end. Everyone should see poll question 13. When I receive an award via reallotment, that award gets added to my total LIHEAP funding and is therefore subject to the 90/10 obligation requirement. Which year are we referring to? So you receive an award via reallotment. It's usually a small award. And that basically gets thrown into your regular LIHEAP award. So what year are we looking at when we talk about 90%, 10%? The funds came from the prior year, right? They were from 23, you know, previously, but they're getting added to my current award. Which year does the 90/10 apply? Since, you know, the funds came from another year. Or is reallotment subject to the 90/10 rule? We never really talked about that. All right, Megan, I think we can go ahead and share. Most people got this one as well. Even though the funds may be reallotted from the prior year, they get added to your current funding. So when you're calculating your 90/10, make sure you're adding up all your NOAs, all your funding from that current year, IIJA, reallotment award, your current LIHEAP, and that's when the 90/10 is applied. So as you know, oftentimes our reallotment doesn't really come till the very end of the year. So this is another plug to not carry over your max. Always allow a little bit of room for last minute reallotment, vendor refunds, stuff like that. I'm finally done. We're going to turn it over to my esteemed colleague, Natanya. She's going to take us through how all of this that we've talked about ties into PMS, another really critical part of how this all works. So with that, I will turn it over to her.
Thank you so much for that introduction, Andrew. I will say, the polls were really fun. Unfortunately, I don't have any polls for you guys, but I am coming with a lot of excitement and just information. Can we please switch to the next slide? Thank you. So the payment management system is a centralized system used by the Department of Human Health Services, HHS, to manage the disbursement of grant funds and other payments to recipients. Some of the key aspects and functions of the payment management system for HH grantees is financial management, payment processing, as well as financial reporting. So when it comes to financial management, PMS facilitates the distribution of funds awarded through various HHS grant programs. It also handles both the initial grant award and subsequent funding increments. Now, when it comes to payment processing, PMS processes payments electronically, ensuring timely disbursement of funds to grant recipients. Payments can be made via electronic funds transfer, also known as EFT, directly to the recipient's designated bank account. I'm just going to add a disclaimer here. We like to remind agencies that they're keeping their designated bank account information up to date, because we would like to deposit the funds into the correct account. And lastly, like I mentioned, financial reporting. So, the lovely reports that Andrew mentioned earlier in the presentation, recipients can access financial reports, submit financial reports and transaction details through PMS. These reports provide transparency and accountability regarding the use of grant funds. Now, these next couple of slides, we're going to go over different roles and responsibilities for each, big, player in the grant life cycle. So the first responsibilities we're going to go over is for you guys, the recipient agencies. Now, as a recipient agency in PMS, you guys will be using PMS to request funding. Recipients will use PMS to request the funds for that grant project. This involves submitting payment requests through the system. And another thing you guys can use PMS for is to manage funds. Now, once funds are received, recipients are responsible for managing and distributing them according to the terms of the grant. This includes ensuring the funds are used for the intended purposes. Thirdly, reporting. So recipients must regularly report on their financial activities. This includes submitting federal financial reports, also known as CFFRs, and other required documents to demonstrate how funds are being used. Next is compliance. Now, recipients must comply with all federal regulations and guidelines related to grant management. And lastly, PMS is a great way to communicate. Recipients need to maintain an open line of communication with the awarding agency and PMS support to resolve any issues or questions that may arise during or throughout the grant period. Now, the next key role in PMS is your PMS liaison. Now, the PMS liaison accountant is responsible for approving payments and performing cash management processes. They maintain recipients' accounts, analyze accounts for excessive cash and overflow disbursements. The PMS liaison also reviews payments that failed system edits, accessing funding methods to ensure drawdowns are within compliance. The PMS liaison is also responsible for resolving any audit findings, collects federal funds on over advanced accounts, as well as refer to collectible debts. Now, the PMS link to find your PMS liaison the link can be found in the next couple of slides, in the resources slides. I will say we do have quite a robust list of links that are going to be very helpful throughout your grant cycle. And lastly, now the awarding agency, which is the agency I work for, OGM. Here at OGM, we are responsible for establishing entities in PMS. So when it comes to creating the agency's account, that's our doing. Issuing awards to recipients, PMS is also paying agent for agencies that award grants, as well as reviewing PMS accounts at the end of the grant year. Now, PMS is also responsible for deobligating unused funds and taking the necessary actions to close grants and PMS. And if at any point your agency would like to reopen a closed grant, it can only be done necessary, but OGM will initiate the grant reopen process when federal funds are returned to an closed award. Now, there are several ways recipients can return funds to PMS. Again, I'm going to ask you to refer to the link in the resources tab. This link will provide instructions for returning federal funds. And that's all that I have. Thank you guys so much.
Thank you so much, Natanya. I will take it from here, and I want to wrap up today's conversation and take a moment and highlight again the importance of submitting information on your carryover report and the federal financial report accurately, and how this impacts LIHEAP reallotment. So our goal is to issue LIHEAP reallotment as quickly as possible in order to allow you sufficient time to obligate those additional funds. So let me talk about the process OCS and OGM take to complete to make this happen. So the process of reallotment begins with OCS and OGM reviewing the reports to compare reported unobligated balances to ensure that they reconcile. OGM then takes that information and compares it to what's in the PMS account to ensure funds are available. And then OCS and OGM reach out to grant recipients, notify them of the reported amounts, and provide them time to update if there are any discrepancies. OCS and OGM then determine the final amount, and then they put a freeze or a hold on accounts where funds that are subject to reallotment in PMS. OCS also begins to issue one of two Federal Register notices. Then the next step is OGM begins the deobligation process of those funds so that they are available for reallotment. And then OCS, utilizing the LIHEAP funding formula, issues a reallotment to all grant recipients. So again, I just want to highlight, as we discussed today, it's critically important that the reports reconcile and that this information is accurate so that we can get LIHEAP reallotment issued out to you, the grant recipients, as quickly as possible. With that, I will turn it over to Drew to do final remarks.
Thanks, Megan. And just want to remind everyone, we will share the slides. So if you're like, oh, that's how reallotment works, that's how they get to the final number. Ultimately, we will share this. It's really critical that these reports are correct. I know it's a shameless plug once again that I'm saying that they reconcile because of the 1, 2, 3, 4th bullet on this arrow, which says that funds are actually frozen in PMS. So once we come to that final number of what you can't obligate, we freeze that in PMS. We don't want to be taking money away from you or the communities that you're served if we don't need to. So please make sure that the obligation numbers are correct. It's also not a problem if you can't obligate everything. Reallotment goes out to the whole network. So it will go back to the communities if you're not able to obligate it. Ultimately, we'd love to see everyone have 100% obligation as quickly as possible. We understand every grant recipient is dealing with their own internal policy. So just really important that everything reconciles. We have a 14th poll. I promise there's only 2 left. Oh, and my shameless plug maybe ultimately gave everyone the answer here. OGM will freeze or place on hold my LIHEAP funding that is subject to allotment. My bad. True or false? I guess I was just too passionate about the last slide that I jumped ahead of the game here. Megan, I think we can go ahead and end it and share it whenever you're ready. It is true. OGM will freeze or place on hold your LIHEAP funding that is subject to reallotment. So critical that everything reconciles. Last 2 slides really just go over, our resources and any outstanding questions that we need to answer. Natanya referred to kind of some resource links during her presentation. I would definitely, when you get a copy of these slides, make sure that you file these, favorite them on your tabs. There's a lot of really critical information here. FFR instructions are listed on here. If you need to look up your liaison accountant for PMS is on here. We often get questions about returning funds. So if you do get one of those, vendor refunds or funding that you can't obligate, how to do that. A lot of really critical information on this slide. If you need help with PMS, there's the email address listed in that blue circle. Again, PMS is SF425, as well as how you obviously get all of your funding when you need it. So really critical information here. Grant Solutions was the other system we talked about today. There is a help desk for Grant Solutions, email and phone listed there on the slide. There's also some training resources listed on their website, which we have a link to as well. You always can reach out to your program specialist if you need help, but these are probably likely where they're going to direct you. So if you ever just want to cut out the middleman, here are the resources for Grant Solutions. And there's some other resources that I think will be helpful to everybody based on what we discussed today. There's an email address there for your OGM contact. We talked about the grants management officer being listed on your notice of award. If for some reason it's not, or you don't know where your NOA is and you need to know who to reach out to at OGM, there is an email address listed on the site there. I talked about the terms and conditions a little bit earlier on in the presentation. Please go to that website and make sure to read those. We had one question about indirect costs. Thank you, Natanya, for including that. I think that's really important for folks who maybe aren't sure about their indirect cost rate or how that works. That's a really useful resource there. And then the OCS point of contact list is updated frequently. It'll have your program specialist point of contact. It has my information, Megan's information. If you ever need to reach out to OCS and you're not sure who your program specialist is, that's a really good resource as well. Poll 15, this is a wrap-up poll. I promise it's the last one we will do. We want to know how helpful this was in understanding the two reports. Feel free to be honest. If something isn't helpful, we totally understand. It's a lot of information and it's a very complicated report. So and we have almost all of the respondents, so we're good to go. This looks to be helpful compared to our first poll, which is how prepared people were for filling out these reports. We really hope that this webinar helped. It is recorded. We encourage you to share it with staff that maybe are new to the role, who are new to completing these reports. And with that, we will, I guess, open it up for questions. I know there's no chat function here, but if you have any questions, we'll kind of reserve the last 10 minutes here to address those in the Q&A function. Is there a way to get a copy of the Q&A discussions? That's a good question. I don't know, but we will look into that for you. If nobody has any questions, if you don't have any questions that you want to put in the QA function, you are free to go. We'll give you back 9 minutes of your day. Have a great rest of your week and weekend, everyone. We really appreciate your participation. Reach out to us with questions and we'll be sharing the PowerPoint slides and the recording a little bit later. So thank you, everyone.